Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. Today is September 6, 2018. I'm going to take a quick look at the Russell 2000 just to give an overview and some perspective on things. And the two things that have really popped up just recently, one yesterday we had a stretch high, and today we had a doubt high as far as a profit taking. And these are on daily bars. So let's just go right to the chart and just give you some perspective as to what's taking place and the reason I'm talking about the Russell. Specifically, here's the Russell daily bars. You can see that it broke above this resistance level over here. It's come up, it's peaked a little bit, and now it's come back down. And right now it's kind of sitting on that support level right through here. What we have is kind of no man's zone here when we're looking at the elastic level. The volatility is a little bit high, but nothing dramatic, but this could actually kick into gear. We've got a wave high that has been underway for quite some time, so it's kind of pegging this top here and the reversal. Nothing showing up here on the power level, but when we take a look at the some of these alerts, specifically the stretch high, this red dot if you will, which occurred yesterday, not today, but with that particular stretch high, you can look at the recent past and you can see that the market has sold off a little minor, but nothing dramatic, but did sell off, a nice sell-off, a nice sell-off. So the point is that if we come back to the daily bars, because we're sitting right now on this support level, if we don't hold here, then we're going to be looking at multiple layers or multiple levels that we can actually fall to. And I just want to have a cautionary tale that with the systems being flat the market right now, if it should actually break below this particular level, I'll just pull this up here so you can see it. This on the Russell 1713 and a quarter and 3/4 I should say, that if we break below that level, then we're really looking at multiple layers or multiple levels that we can actually fall to. I'll just go to one of the more extremes. Obviously there's lots of levels we could fall to, but based on daily bars we could be looking at 16, I'll just call it 1638 and a half. Now that's going to take a while to get to that level, but we'd be looking at the lows that were set over here, and like I said, you could be looking at the 50-day and multiple different levels, but for the most part what we'd like to see if we're long the market and we're flat is a support at this level. If it should break, then we've got many levels we can actually run through. And if we take a look at the weekly charts, again, here are the weekly charts. You can see that we're basically sitting on that support level right there. Now this is a little more dramatic, but if it should fall to this level over here, we're looking at call it 1625. That's what this level is. So that would be pretty far. But these are weekly bars, and there's enough that's really kind of telling me that we should have some caution. We've got some resistance levels that are up to par. We have the wave highs that have been triggered. We've got some divergences that are picking up here, and I'm not saying bear market and secular bear markets are going to begin here. All I'm saying is that we're at a critical point, and I'll let the pundits and the talking heads on TV talk about Chicken Little saying that the market's going to sell off and that we're in a bear market. All I'm saying is short term, watch the market because we're at a critical level, and it's something that people should be aware of when it comes to some of the divergences that are actually out there. And what I mean by divergence, you can see a higher high. You can see a high in the elastic level and a lower high. So there's a divergence. The indicator, the elastic level, is telling us where the market wants to go. And when you have this divergence, in this particular case, a higher high, if you look at those points, a high and a lower high, that's a divergence, and that gives us an indication that this threshold, this support level that we're at right now, had better hold. If it doesn't, then we can start to look at lower levels, and we can go into more details as to what those are. But for tonight, I just want to at least point out that at least in the Russell, you see similar type things in some of the other markets, but I think it's a little more pronounced here in the Russell, given the fact that it's had a greater surge to the upside, that the broader market, if you will, is telling me that if it doesn't hold here, then we could be looking at lower levels either on the weekly, which has got some distance to fall to, or at least on the daily bars. You know, we could be looking at the 50-day moving average just as another level that it could go to, 1695 and 3/4. And that's a moving target, but something to at least look at. And then we've got those other levels that I pointed out. So if you're trading the broader market, watch your positions because we're at a point right now that all hell could break loose, and we could be looking at lower levels. Not necessarily saying a secular bear market, as the fearmongers will be talking about, but it is nonetheless an opportunity to unwind part of the positions, which is exactly what this doubt high is talking about, and the stretch high reversal is referring to. That there's enough indication that's out there that as a minimum you should be taking a closer look at the broader market when it comes to the equity markets and reassessing your positions. So from that standpoint, we will look at some more markets in the coming days and go from there. Thanks very much for watching. Bye-bye.